Hello, I'm Matt Parrett, a Chartered Tax Advisor with Tax Shop Accountants in Wellington. Today, a short uh, discussion on tax tips for company owners, and I'm looking in particular at the smaller limited company. So, you've just set up your company, and the question I get asked all the time is, what can I claim? What can I claim for? I've no idea. Can I claim this? Can I claim that? And generally speaking, if it's at most business expenses, you're going to be able to claim for. So just be sensible and book it down. If you're not sure, ask your accountant. But all your normal stuff like printing, stationery, telephone, advertising, purchases, materials, protective clothing, these are all things you'd expect to be able to claim. And generally speaking, yes, you can claim for them. But I'll always talk to my clients when they come in, there's always lots of items that they haven't thought about claiming for. Now, what I was going to go through, just some of those items that I would direct my clients to claiming, just because if they're entitled to it, they should claim it. So the first thing, if you've got a non-working spouse, get her to do something in your business. If she's answering the phone, if she's the company secretary of the company, get her to do something. Doesn't have to be much, and then you can put a salary through for her. So if she's not got any income at all, she could be company secretary, she could do a little bit of bookkeeping for you, and there's, write up your company minutes, and there's no reason at all why she shouldn't get £11,000, £12,000 a year. The personal allowance is going up to 11,500. Give her 11,500. There's no reason why she or he shouldn't have that level of remuneration. It's going to be tax-free for them and tax deductible in the company. So, that's a great way of saving yourself £2,500 immediately. Secondly, if we're talking limited companies, as we are, again, in the instance where your spouse doesn't work, consider giving her some shares in the business. If you take out all the money, if you earn a load of money and you're taking it all out, you could push yourself into high rates of tax. If your spouse takes out some dividends, you can equalise your income. And that's the whole idea about tax planning, is to equalise your income. Beware though, if you give shares to your spouse, the spouse legally owns part of your business. So if you split up, get divorced, you won't own all of your business. You might feel slightly out of control, but however, most people are prepared to take that risk, and it will save them a lot of tax, generally speaking. So spouse, get them involved in those two ways. The next one, we've all heard of, well, you may not have, but most self-employed people have heard of use of home as an office. Now there's an HMRC allowance of £4 a week, not massively generous. So you can either use the £4 a week, or you can create an agreement between your company and the homeowners, i.e. you or you and your spouse, whereby the company rents an office in your home. Now, I would always recommend doing some paperwork for this, and that's what I do for my clients. I produce to them a non-exclusive license to occupy, and it's a legally drafted agreement where the company can take non-exclusive use of, for example, a third or fourth bedroom and work in that bedroom non-exclusively. Great idea. So get the kind of figure. I mean, you're comparing the rental figure with what you would pay for a serviced office in a similar location. It might be £2,000, £3,000, £4,000 a year. That, let's say it's £4,000 a year, and it's down to you, it's your house. You would declare that £4,000 a year on your self-assessment, but you would deduct from that a good proportion of your running costs of the home. Like a proportion of your mortgage interest or your rent. your utilities, your light and heat, your insurance for the house, repairs, that kind of stuff. So you can get that £4,000 perhaps in this example down to maybe £1,500 that you get taxed at maybe 20% on. So you're going to save a lot of money by doing that. Also, you don't have to get the money, if you're taking dividends out, you're going to pay dividend tax. This gets you the money out without dividend tax or national insurance. That's the beauty of it. So get yourself a home office license in place. It could be £5,000 a year, £100 a week. Just do your research, find out, phone up the local place where you rent a serviced office, get a price off them for something similar to the bedroom or the spare room you're going to be using. Next point, I would say, when you set up in business, you will own a lot of assets personally that you'll use in your business. I'm thinking of things like iPads, laptops, office desk, chair, tables, bins, stationery, whatever. Make a list of your assets at the outset of your business. I'll bet you it will come to £2,000 or £3,000 minimum. If you have tools in your trade, value your tools. A toolkit, it could be £2,000, £3,000, £4,000 of tools. All these assets you can then sell to your own company. The company will get tax relief on it, and you can get the money out of the company tax-free. Fantastic. Next, pre-trading costs. You'll have had this great idea to go into business. You'll have run around seeing accountants, seeing the bank manager, looking for contacts, contracts, etc., before you set your company up. You will have incurred costs, I guarantee it, on doing that. Mileage, telephone, subsistence. Claim it, record it. You can go back and claim pre-trading expenditure. It all helps. Mobile phones. If you get the contract in your name, if you get the contract in the company name, the company will pay it. There is no personal tax benefit on you, and the company gets its tax relief on it. Alternatively, if it's in your name, work out the business proportion of that contract value and claim it as an expense. Very useful. Also, while we're talking telephone, claim a proportion of your home landline and your home broadband. Why not? You're at home, you'll be surfing on the internet, yes, for some private stuff, but also more than likely for business use. It could be 50, 60, 70, 80% business use of your home broadband. Claim it. Mileage. If you've got a limited company, don't have a company car, generally speaking, unless it's an electric car. Who wants an electric car? I looked at one myself. It lasted for 20 miles, the electricity, before it ran out. Rubbish. You get great tax relief for electric cars, but they're not ready yet. They will be, but they're not ready yet. Generally speaking, claim your mileage. 45p a mile for the first 10,000 miles. You'll get a good profit on that. Pensions. If you pay a pension, if you've been paying it personally, switch it to coming through out of your company account. You'll save the dividend tax, i.e. to pay it personally, you'd have to get the money out of your company, pay the dividend tax, and then pay it into your pension. Instead, pay it gross, straight from your company. Much better, much easier. Great move. Subsistence. A lot of people come to me and they say, well, I think I could claim subsistence. Of course you can. If you're travelling, you're allowed to claim travel and subsistence costs. So if you're out on business, going to a job, and you stop off for a coffee and a sandwich on the way, you're a bit tired, whatever, you can claim that. Get a receipt, claim it. That's what subsistence is. And the last one for this, there's loads of things I can think of, but this is another good one. If you're a limited company, you have to have a board meeting. Board meetings generally are for things like when you want to vote a dividend, take your dividends out. Most people take dividends out monthly. Now, to vote a dividend, to make it legal, it has to be voted at a board meeting, and you need to keep minutes of that. My suggestion to you, go to the pub with your spouse once a month, have a lunch and maybe a pint, preferably non-alcoholic, but you know, we're only talking one. This is a business meal. You can claim the business meal against your tax. Don't go mad, and it's not for getting a load of beer down your neck. It's get in the habit of claiming a meal once a month. Take the minutes, vote your dividend, and then nobody can argue about that expense.